Thanks very much. By way of introduction, essentially, I've been spending most of my career in the front end of a regional brokerage. The last couple of years, I've been focusing on technology and operations as Chief Transformation Officer. Prior to that, pretty much on electronic trading for a good number of 2 decades. Let's just get straight into the context. What I'll do is let's put everyone on the first slide so that everyone has a fairly good idea of what we mean by artificial intelligence. It's a very, very broad term. But essentially, for many of us, given the wide breadth of the audience profile, we think of AI as generative AI, but it's much more than that. So this is actually one of the better slides I've come across. Artificial intelligence is really a very wide topic. The smaller subset is generative AI. A little bit bigger than that is deep learning, neural networks, and machine learning. We'll touch, I think, during the course of today, more on the broad AI and machine learning as well as generative AI. Now let's move on. We talk about challenges and so on. I think for AI in general, the biggest challenge is trust by businesses as well as consumers. The trust varies significantly because a lot of studies have shown the AI tools right now are very much in a nice-to-have category rather than a must-have, right? It takes a lot of work to get to that area. And one reason is people don't trust AI. In fact, that means there's a need for regulations to protect both the users or consumers or the investors. Example, the Journal of Hospitality Marketing and Management study found that in the US in particular, describing a product as just AI powered, in fact, tends to lower a customer's intention to buy. So that's quite interesting. The acceptance of AI, therefore, is going to take time. The other challenge is the implementation of AI for many of the corporates and so on, because one, data quality and the embedded knowledge is really a challenge. A lot of the data architecture is not in a kind of place where it's easily convertible to maximize the use of AI. Security, privacy, the alignment of management on a starting point, having a vision without the right level of conviction because it's long-term, scalability and complexity of integrating AI within legacy systems. All of those, I think, are big challenges in the implementation of AI. The other, of course, is what is today known as AI washing, exaggerated claims that users become a little bit more immune to and start to lose trust. The third challenge is really the implementation of the vision. So most businesses expect Gen AI, for example, to enhance business metrics. However, 90% actually believe it's crucial to the function in the next 3 years, but only 50% have the confidence in their current AI strategies. So that's actually quite interesting. My view is that AI, especially generative AI, will transform the B2B and the B2B2C business models. I think they redefine the landscape. Many first movers are stumbling. And one of the biggest problems here is getting attractive ROI over the legacy models and getting the quick wins. Now let's go on to the topic following that introduction. Today, I'll cover 3 main areas. So the next slide will show implications, where we are looking at implications for data, as well as implications for the management. Could we move on to the next slide so that the audience can see the scope of the discussion? And then we go on to the role of the platform strategy that AI can play. And we talk about applications. So I'll show you maybe what I'm familiar with in terms of current technology and examples of implementation. And let's try to see if we can get it a little bit more, I would say, practical. Okay, talk about the data. One problem is 70% of organizations actually report difficulties in developing processes for data governance and integrating the data into the AI models. That's a big challenge, right? In the data world, you have ETL, which is extract, transform, and load. That process, especially across countries and boundaries, is very difficult if the architecture is wrong. The problem is a lot of companies actually start off with data architecture that's meant for the prior world, not for the next gen of where AI could play a big role. opportunities. When you look at data, there are two types of data, actually, what you call structured and unstructured data. I think the big opportunity here is that structured data is actually just 10% of data available according to a lot of studies. Gen AI, therefore, has the potential to open up 90% of data that's actually not structured. So this is videos, pictures, emails, product reviews, and so on. Very, very wide potential for really extracting a lot of value out. So data, as many people know it, is what you call structured. The potential really is maximizing unstructured data. The second opportunity for data is really commercialization of data-driven insights, particularly in the investment markets. We see a lot of banks locally in Singapore do that. But some numbers. Globally, the structured market data industry in 2023 was worth US 42 billion. That's a lot. No, I will let you basically run the slides. I'll just go through sort of chat there. The second opportunity we talk about really, as I was saying, the commercialization. It's really a focus now on quality over the price, the quick wins in automated insights and market commentaries, which are beginning to see in our marketplace. I think that's going to be very, very useful. The challenge in my mind is really coming in to have a fit-for-purpose data architecture and a data structure. A lot of challenges, as many companies will tell you, you have data silos and data swarms. The data warehouses and data lakes that are being implemented are not fully fit for purpose. The confidentiality and protection required, the regulatory and regional boundaries that are creating hurdles, I think these are areas that really become very large challenges. Let's move on to implications for management. In the McKinsey survey, actually, they found 65% of big organizations are regularly using Gen AI in at least one business function. That's up from 30% last year. The rate of adoption is actually quite quick. And that actually means that we're going to see the adoption of all of these AI possibilities increase exponentially. If it increases from just 30% to 65% of the biggest players, you can imagine that would actually spread downwards. So in short, if you're not on the AI game, essentially you're standing still on a treadmill. Underwhelming ROI and strong business cases provide a big challenge for management. I think one of the big struggles is you've got to invest over a period of time. The technology, even for many of the startups and so on, lacks the level of ROI needed to become very profitable. It's very hard to hit a home run, so it takes years. So that goes back to my point earlier. You need the conviction behind the vision. So companies actually, what it means is it requires a leadership team that's very, very familiar across three major areas. One, you need management that's very familiar with governance and compliance to focus on the defensive aspects of AI implementation. You need engineering and architecture people to focus on the technical design. And you need people with a sense of the business value of AI so that they can see where to generate growth and efficiency from the use of data. Now, let's move on to the middle part, which is the role of platform strategy that AI can play a part in. So what do you mean by platform strategy? I think this is where, in my mind, it has the greatest potential to change the game. A platform strategy essentially has players which act as a B2C middleman, very technology driven. So if you think about it, like Netflix, they sell a lot of movies. They don't own the movie studios. They don't make a lot of big movies. Uber, they sell a lot of rides, trips. They don't own the cars necessarily across the world. Airbnb, they don't own the hotels, but they sell accommodation. So in all of that, you find that these are very much a B2B kind of technology strategy that's really changing. In short, in layman's terms, it's really an e-commerce world. The key attributes are one big opportunity you can look at to really put down your flag on competitive differentiation, right? What's really going to be driving platform strategy gives you the ability for scalability, use of data, and a B2B link to connect the demand to the supply aspects. I think that's where AI has a huge potential. So my view is that the platform strategy is really a way to disrupt the legacy business models. We all know that. But I think what will happen is that AI will help to create what you call the next gen models to replace the old school models. In the broking business, you're actually starting to see that the new digital brokers around the world actually are onboarding customers at a far greater rate than the old brokers on legacy models, right? So it will be very much driven by investment in technology. They have to take a very far-sighted position. In the next 5 years, I think you see the local brokerage industry upended and threatened. Well, let's see what happens over the course of the next couple of years. But I think that disruption is really going to be a big threat to the business around here in Singapore. Let's move on to the applications. Let's first start off with how you apply AI in the customer journey approach. One opportunity, if you think about it, I see the customer trade life cycle as a simple way to describe a customer journey. 5 stages here. When you want to onboard a customer, first of all, you have the prospecting, where you get customer inquiries coming in. Stage 2, before he actually does something, you onboard the customer, you open an account. Stage 3, he actually does a trade in investments. He needs information, research, execution, trading. After that, he needs to settle the trade, which is stage 4. And after that, the real benefit comes in when you mine that data so that you can cross-sell and upsell. So these 5 stages offer plenty of opportunities. Quickly, let's look at an opportunity in terms of the inquiries and onboarding. This is where there are 2 types of AI applications, what you call AI assistants and AI agents. These can significantly help drive positive CX. So you find that right here, the focus is on process, which essentially means you're automating low-level tasks to get consistent, seamless, and smooth customer experience. That's where I think the new gen players have advantage over the older ones, where the processes are far more, I would say, manual. The potential for AI agents who take over and supplement many of the human load faced in call centers, allow them to actually engage prospects and customers on bigger issues, simple tasks being taken over by AI. I think you see the banks starting to go down this route. In the brokerage industry, much less so. So I think plenty of potential. In the consumer business out there, I think it's very, very varied. The whole variety of manual right up to automated handling of customer queries allows a lot of, I think, easy start points here. You just take on bite-sized applications without actually having to go through a huge implementation. Second opportunity is in the world of research in this investment and securities business. Now, research, you can look at linking corporate shareholders, interested parties, and account positions being taken at our brokerages to see how the trade patterns are correlated to interested parties in there. This also, I think, has a lot of implications for regulatory and compliance kind of focus. Correlating the price impact from account linkages is another area where it has significant end outcomes. For example, when we had the penny stock saga with Asia Sun's Blue Mont, Lion Gold, there were a lot of related trades that, if you look at it, had a total of probably about 500 billion of impact in terms of daily volumes that actually disappeared. The thing is, without AI and doing post-incident analysis and investigation, you find all of this out only after everything's happened. AI will give you the opportunity to look at it real time as it develops. So real-time earnings analysis is very, very much a key benefit of AI. So What's happened, you find in the US is that, companies, they do corporate earnings announcements. And in the current old model, the analysts call up, you go on a phone call, you get all of the financial data. And then after that, in the evenings, they will write it up and then send out a research report. What AI has changed in that is that there are now vendors allowing you to take in the comments by the CFO during a announcement call and actually transcribe that into text, which means that the analyst no longer has to do that while listening on the call. Secondly, that text is now correlated with trend analysis into historical financial data. For example, if you say, we're going to do a stock buyback, interesting. But what does this stock buyback mean in the context of stock buyback patterns over the last 5 years? That analysis actually becomes something that will be more useful for the end users like fund managers and so forth. Same too, you say my debt is now at this level, is up so much from last year, but actually what the market might want to know is the pattern over the last 5 years. Now, all of that can be automated. So within half an hour of the earnings call actually being closed, you have a ready earnings call report by the analyst ready to be sent out rather than a couple of hours later. That means that the markets can react much more quickly in terms of real-time assessment. Another area, execution and trading, right? The virtual trading assistants was something that I talked about when I did an interview about 4 years ago. I said the world of trading would be changed by the introduction of virtual assistants. I think that was when AI was still not so prevalent. But you think about it in a local context, what I see is that existing legacy remisier model could be changed. The what won't change, right? People still did execute, they still need to talk for an opinion, but the how you do it, essentially intelligent chatbots are going to take over that role because I've seen that actually happen. Incident management. So this is a AI example I saw about 3 years ago, right? Suppose you are a trader, whether it's commodities, futures, and so on, and then you have an outage. System goes down, you wonder what happens to all our positions because actually you're then exposed. You can't key in a trade, you can't exit, but the market's going to be volatile. So the example I saw was essentially a vendor actually using Telegram. It would actually send a message to you saying that we are now down, here's your existing positions, and here's exposure on market. Second, it says, would you like to square? Where possible, and the system is not completely down, it just prevents you from keying in the order, but a link to the exchanges and so on is still live. You can actually say yes. And then after that, it says, confirm these trades. And then you say yes. And then it comes back and say, all these positions are now squared. You have 0 position and you're out. Here's your executed prices. So notice that this means you no longer have the need to actually key in an order. You can actually do it on text. And this, I think, is very valuable to the new generation investors who use mobile phones rather than desktops when they trade. So you have these alert boards going beyond telling you what's going on. And then actually today, when I saw that was in Telegram, it's also available on WhatsApp online, which means that it's applicable in terms of a regional aspect. The other area in terms of where AI could play a big part, compliance monitoring, right? Correlating, as I mentioned earlier, account linkages, trading on the same stock, having a price impact. It takes compliance monitoring and trade surveillance into a real-time arena rather than just post-trade investigation or when you have a complaint. So I think this is significant because actually it means that the oversight in markets can be moved up. So it means buyers and sellers will obviously be very much more careful. And this is, I think, at 2 levels. One would be what you see within the brokerage, which actually falls within the purview of a brokerage as the first line of defense. And after that, what you see would be trades inter-brokerages, between brokerages, where actually it comes from an industry monitoring perspective, typically by exchange. So it changes the way you would work. So really what we are talking about is on the front end, you could actually have real-time analysis on what's happening on a trading desk. You could also correlate this with the data that's in the back end and the settlement platforms, because this will give you a comparison of real time versus historical trade patterns. And that, I think, would make a real difference. We've seen some of the possibilities provided by vendors already. So what I'm talking about will be actually existing AI models being implemented for today's world. Think about it 5 years more, you could see much greater progress. On the post-trade side, one of the biggest challenges is exposure when trades do not settle. I think in this area, AI also would help you turn around the settlement time. So in a very simple sense, without getting too technical, when a trade is done, typically it goes to the back room. The back room goes across to a fund manager to say, is this trade confirmed, etc. And then when a trade is not confirmed because there's not enough money in the account, there's not enough shares in the inventory to actually deliver a short sell, you typically have anywhere between 10 and 20 emails going back and forth on a single trade. What I've seen actually in backend processes for the larger firms as well as custodian is this is handled by a chatbot. So a chatbot here at the brokerage talks to a chatbot there at the fund manager and a chatbot at the custodian. And essentially this allows you to start doing this, not sequentially, but all at the same time early in the morning on the T+1. It actually reduces the risk of failed trades. Okay, you could also apply this to corporate actions, because for US corporate actions and so on, or where markets where you have a very small window of turnaround time, there's been a lot of issues. This is where you can actually speed out with time compression on the turnaround. Lastly, data mining. Obviously, with all of the backend data, when someone does a trade, you're in a very good position to consolidate what is being done, and actually you could actually offer relevant recommendations. The problem today, I think, is when you recommend a stock and so on. The question is, does it matter to the customer because maybe he's not interested? So it's a bit of a potluck, scattergun approach. Those possibilities can be made to become more relevant in the case of using AI with the right set of data. So some of the challenges. In today's world, we talk about research in this area of the customer journey. Managing the misinformation is going to be, I think, you've seen in the normal world, a big challenge. So one of the things is when you look at research and supplement that with curated information, which actually consumers want, the role of bloggers and influencers come in. And the problem is, how do you police that? Because they could actually be walking on an edge, giving advice or opinions, which could be deemed as in the gray area of walking into the recommendations for which they're actually not licensed. But how do you police the world in this sense? It becomes a big challenge. So maybe we could talk a little bit about that during the Q&A. So I think generally speaking, a lot of opportunities within the customer journey. You could break it down. We've given you a few practical examples. So let's talk a little bit more about the intermediary users, right? Investors, I think in my mind, today don't necessarily need research as we know it. So just to qualify here, I'm not saying they don't need research. I'm saying they don't need research as the current thinking of the legacy definition of research says what it means. Think about it. If you own 5 stocks, do you really want to hear about research on the next 100 stocks? Or do you really want to hear about what's going on, the good, bad, and ugly on those 5 stocks that you own? That's actually, I think, more relevant. It's no different from you customizing your feeds from the news wires, getting your Google News coming into you. All of it essentially would be algo-driven, and it's what's relevant to you. I think the potential in the investment arena, in the securities brokerage arena, is actually to look at the new generation investors who are actually mobile first. They are what you call TLDR, too long, don't read. And actually the point is they want to see something that strikes them within a few seconds of that eyeball time. They don't have the patience necessary to read 10 pages of investment research being written. The problem is, in my mind, many analysts are trained not to write in terms of something to catch you over 15, 30 seconds. Analysts are trained to go into detail. So here I think a structural mismatch is a problem. I think in a way, AI assistants, chatbots, AI agents could come in the middle to help bridge that gap. We talked about brokers. Obviously, the biggest impact for brokers would be the customer journey. For listed corporates, I think this is another area which might be of interest because if you look at investor profiles, would you think listed corporates be interested in the kind of profiles that are changing, whether they have more traders in their stocks, how many percent of that versus the buy and hold guys going into your stock? Would that be of interest? Because then you could actually tailor your investment communications, your IR to actually different segments. A lot of times, I think the IR is tailored very much as a one-size-fits-all today. So in IR, analyzing your shareholder profile trend changes, handling investor queries, both proactively and reactively with the use of chatbots. I think all of this is really within reach. The real challenge here would be collecting some of that data, and then the data confidentiality and the PDPA comes in. So I think that's where you just need to be very clear that you don't step out of line. For regulators, in terms of your intermediary users, plenty of scope, right? Exchange level, market trade surveillance, we talked a little bit about that. We could actually also look at the fact checking in terms of documentation required for IPOs and placements and the submissions. The question is, a lot of times it's very, very manual when the submissions come in and they actually have to go through, right? I think having a algo to help you with that, pick out contradictions and so on, that could be useful. And that I think applies even to continuing listing. You can actually do trend analysis, the patterns, and so forth. We could probably get into that during the Q&A because my panelists actually could maybe throw some color and light into it. The broker level, obviously on the front desk, there's a trading desk gymnastics, as I call it. The market participant level, I think one of the things we've seen over the years, look back Pan Electric in the 80s, you look at CLOP, prior to CLOP, 93, 94, where the market in Malaysia was growing great guns. 2000s, you had the S-chips. 2010, you had the penny stock saga. All of these, if you think about it, had multiple accounts in the marketplace through multiple brokers actually trading similar stocks as part of the syndicate work. All of it basically would only have come to light post-event, post-incident, post-damage, and actually then you identify all the related trading account linkages. I think with the algos, with AI, you actually could move up that timeline so that it goes from post-damage to actually when it's actually happening as the players basically look to churn the stocks. So it's really something to think of. What I think has happened is through all of these, from panel, CLOP, S-chips, penny stocks, regulation has tightened. With that tightening of the regulation, you have a lot of challenges because then how do you loosen it? You can only loosen it when you have the technology, for example, with AI, to actually take on that post-incident analysis and investigation and take on prevention rather than look at it as a reactive kind of approach to it. So let's talk about the end users and wrap up with risk management. Right? And the retail trading aspect, I'm quite clear what would change is the what of what remisiers and the TRs would do. The how doesn't change because at the end of it, you don't want a solution for which there's no problem. And what I mean by that is that essentially for the account executive, the customers always go to that person to execute. They go to that person for information, for rumors. Today, all three areas. Execution is online. Information, rumors, the buzz is available on chat forums, social media. Research is also available quite easily online, soft copies, and so on. They still need that in order to have their trading decisions. They still need to read the news. What they don't need is to go through a human doing something that the world has now replicated with technology. So I think it's really the how that's changed, and that will continue to be the case. The what the guy needs to make a decision to put money into something that hasn't changed. So AI actually allows a greater focus on individual needs and the issues at scale. The virtual assistants have a huge potential for research, training, and settlement, and so forth. Right. Wealth management, obviously, is not so different in the context of the what is not being replaced, it's really the how. But I think one big difference is that there's a new trend towards a high-touch, high-tech kind of approach where the human actually remains the key. So in short, the use of intelligent automation where 50 to 60% of hours could theoretically be automated, I think that's where generative AI can really come in. Risk management, without going into the details, I think the key takeaway here is that AI will introduce new types of risks to address. And maybe a lot of companies are not set up to do this. So what I mean by new types of attacks, first of all, Gen AI opens a door to completely different ways that you have to defend because it involves self-evolving malware, intelligent bots, and infected data that can be inserted into the training of Gen AI models. The second kind of new risk is that there's a broadening and deepening landscape whereby you have interactions between AI and data systems, creating significantly greater surface area for damage to be done. And that's because of scalability typically for AI. And new unknowns. The question is how interacting with AI means the companies will now enter an ambiguous zone of value systems. So let's move on to my concluding slide, which is really the bottom line. Over the next 5 years, I think AI will firstly redefine the competitive landscape of the securities and investment business. More so, I think, where in Singapore, we are the melting pot of a lot of trading flows in the marketplace. And you have actually a wide extreme between the newest next-gen models and the older school broking models. I think that is where the pressure will come. As I said, the how is going to be addressed more than the what of the legacy business models. And I think when you want to do this kind of transformation, from my experience, then AI would really truly test the conviction behind a company's management and its shareholder vision to future-proof. Everyone has a vision, yes. Everyone says this is where we need to be. Whether you have the staying power to invest, not get a payback so easily within the first year or two, and then stay the course so that you see the fruits come up, where you plant a seedling and see it grow before it bears fruit. That is where I think the conviction behind vision is going to be tested. And with that, I shall round up my presentation.